So my portfolio is pretty diverse. I'm most known for self storage, I think, because I have a blog for Inside Self Storage, and I'm going to be speaking at the Worldwide Expo for them, and so they share a lot of my content specific to self storage. And then, quite frankly, the last 3 years with our self storage acquisitions and developments, they've exploded so much that it just anytime you kind of toss it like, oh, we had 137% return, something like that, then people just kind of take notice, but in reality, my portfolio is it's diverse, but because my self storage assets have just exploded, it's starting to take over a greater portion. But I have I have a number of limited investment opportunities I've invested in as well, which I like the true investment, completely passive. Self storage, industrial, triple net, brokerage, do consulting. Mobile home park, assisted living, we're kind of all across the board.
All right. Today on the show, we have Charlie Kao, self-proclaimed self-storage expert. As he said, that's what he's best known for. Super excited. You are the first self-storage person that we've had on the show. And the one thing I've learned about self-storage people is they are all either crushing it or they are completely full of it. So we will see which one you are. No, I'm just
they expect people's champ introduction. So
yeah, right. So awesome, Charlie. Well, thanks so much for coming on the show, man. It's super good to meet you in person. And we've chatted a little bit via DMs, but I'm super excited to hear about your backstory and everything you have going on.
Yeah, thanks for having me.
Yeah, absolutely. So I guess first off, give us a little bit of background, kind of, who you are, people who want like a, more deep dive introduction onto you. Like where should they start?
Yeah. So, I got my start in real estate through my dad. He was a really heavy owner operator. I mean, pretty much every single aspect of his business outside of the tax returns, he pretty much did. So, clean outs, doing the repairs himself. He had a contracting background. And so, kind of long story short, he had a job as a handyman for this woman that owned quite a bit of commercial real estate. And what happened is one day at one of the restaurants, one of the chefs didn't show up, and my dad happened to be fixing something there. And he said, I think I can take over as the chef. And she was like, I don't even know, like, if you're joking or not, but yeah, you can try out and do it. And so he did that. And then she's like, all right, well, I don't mind giving you this position, but I need to hire another handyman before I have you take this position. And my dad simply said, I'll do both. So he basically banged out 2 full-time jobs. And then I was kind of his fill guy where, hey, son, after work, I need you to do something. Pretty much short of making me fake being sick to leave school to work on one of his properties. I pretty much did it all. Every child labor law you can think of, I pretty much violated. And so, long story short, from there, I was like, real estate sucks. I'm getting out of this. And I worked in health, fit, and fitness. I worked in commercial lending. I worked in med tech sales. And over that time, what I kind of realized, because I worked for some of the largest companies in the world, sometimes the largest company in its class in the world, where, I'd be making them close to, $100 million in sales, a year. And yet I was making like 0.001% of that. And so I realized, if I could do this for myself, and obviously I'm working as much as an entrepreneur is anyways, I'm pretty confident I could have a better lifestyle and also not be told what to do all the time. Not be told when I can take vacations, not be told, I can't hire this person. I got to hire this person because he looked good on paper, or I can't fire this person because I didn't do enough talking about reports about why I can't fire them or whatnot. So I got to do things my own way.
Yeah. Nice. So where did you grow up? Did you say what part of the country?
Yeah, so I grew up in central Michigan area, and then I lived outside of Michigan for about a decade, and then I moved back. I always say a few years ago, but it's over a decade now. So it was 2008, 2007 is when I moved back.
Okay.
Oh, gotcha. That's when properties were cheap in Michigan, Detroit in particular.
Yeah, that was one of the reasons why I moved back was, you had properties that you could seriously buy it for credit card. And one of the first properties I bought, I pretty much did buy it with a 0% credit card offer. And then I just paid it off before that 18 months was over. So
yeah,
That's wild.
I was actually planning to move to New York City for a position there, and then a lot of stuff happened, and I just realized, I think this is a sign that I need to stay, and I'm glad I did, obviously, because I don't think I would have created the wealth I did if I moved to New York City. So,
yeah, absolutely. Right. No, that's an interesting background. And so you said you're got into real estate through your father. I guess what was his real estate holding situation? Or was he mostly just on like the operator side of it, or was he actually investing?
So yeah, I mean, we had residential properties, but mostly it was commercial. So that same woman that he worked for, he created so much value for her, and just eliminated headaches that as she retired, she sold off her entire commercial real estate portfolio, which was primarily retail, office, restaurants. And so that was kind of the early exposure I had. And because my dad didn't really speak much English, I was pretty heavily involved in the business from the fact that I was, it's kind of funny. My dad chose me to translate documents more so than my sister, because I think my sisters were trying to, so anybody that has an interpreter will tell you that you're not supposed to try to give your own spin on what they're saying. You're supposed to translate it for exactly how it is. And I think that's why I did a good job, is because I was just using the simplest words possible to just explain that this is what this says, which is what my dad needed. Whereas my sisters, I think, would try to give a high level explanation on it. It would just make things worse. So I think that's why I was the one that my dad chose to translate these documents that, a lease agreement or, whatever legal letter or whatever you can think of.
Yeah. I'm still just absolutely fascinated. I'm hung up on the fact that your dad was a handyman and just said, I can be the chef too. But then how that parlayed into becoming a commercial real estate property owner of just showing up and being ready to say yes to anything. That's just incredible.
Yeah. I mean, it's kind of weird because you're kind of just because you fix these places up doesn't mean you know anything about it. But he didn't.
Exactly.
He didn't have fear. But at the same time, I mean, it's kind of well, what is scarier? Coming to a country when you're 39 years old, can't speak English, trying to find a job and support a newborn and 2 other kids and your wife, or getting into commercial real estate. So from that aspect, when you word it that way, it's kind of well, it really wasn't too much of a risk for him. Even though I will say that my dad is ultra conservative investor, and I'm a conservative as well, but he makes me look completely I don't know. So
yeah, that's interesting. And where did they come from?
I was born in Taiwan, and then we came over here when I was 5 months old. So I pretty much was raised in the United States most of my life.
Interesting. Gotcha. So as you started looking at these properties, these opportunities came up, how did he pay for them? I mean, especially coming from Taiwan, that period of life, just culturally as well. I imagine things like credit weren't exactly huge, on loans. I guess I don't know. I'm probably slightly stereotyping here, but out in Seattle, I had a lot of friends with Asian backgrounds, and they typically weren't big on using leverage and that sort of stuff, especially if they had family members that were from the home countries. So how did he afford these properties?
Yeah, so I actually never got that question before, but he bought them all on land contract, but he had a ton of money saved up. I mean, even when we were wealthy, even when my dad was a millionaire, we seriously still lived we didn't live off of food stamps because my dad wanted to do government benefits, but we lived like it. I mean, I remember when we were young, there was a time when my dad was like, hey, you need to take a bath while the bath is still warm. I'm like, no, I'm good. I'm like, no, you need to, because I don't want to fill the tub one more time with bath water. You gotta reuse the bath water that your sisters just used. That's how crazy low budget my dad was. So what I'm saying is yes, he was a millionaire, but not your typical person. Very much the millionaire next door, where we just run ultra low expenses, live off $8,000 a year. So if you make $70,000 a year, but you only spend $8,000, you're good to go. So, but oddly enough, the woman, I actually don't really remember the woman that well because I was so young, that sold him off all this real estate. But she put him in such a situation to succeed that he was able to pay off all those balances off. He might have gotten bank financing at one point to, for when she wanted to get it paid out. But I mean, I knew that, she didn't want a huge tax burden more than likely. So that's why, she sold it to her on land contract. But interestingly enough, my dad did not follow that exact same model when he sold his businesses, and he paid dearly for it because he sold a number of his businesses off on land contract with the people who were not put in a situation to succeed, and essentially they defaulted on the loan. It was a huge mess. So kind of funny how history repeated itself, but we learned from it in the first place. So
Yeah, that's interesting.
Yeah.
Here, hold on 1 second. We got a weird audio change going for there, Charlie. We can cut this out.
Yeah, something like just kind of.
Can you talk?
yeah, yep.
Oh, it came back. That was super weird.
Okay, you're
your
good.
mic like cut out or something into like a strange tin can. Max will cut out the last like couple seconds here.
Okay.
So all right. No, that is super fascinating though, and we'll move on to your story. I'm just like, I love these stories of people that like come from these other countries and against they're against the odds really in so many ways, and they're able to figure these things out. Like, that's super fascinating. So that level of, I guess, frugality that you have, did you take that, do you carry that still in your life, or?
I do now, but I actually went the exact opposite way. I mean, think of it like as like the pit bull getting let out of the cage and going nuts. Like, I went nuts for like a few years. I actually had some debt problems because like I was just always being told like, no to this, no to that. Like, I remember like in 7th grade, I really wanted this Nike sweater that was hanging up in the Foot Locker. I don't even know if Foot Locker is still around, but the sweater I wanted, like, I told my dad about it. We went in there and they discounted the ugly brown one by $10. My dad made me buy it. And not only that, but my dad's like, well, you're still lifting a lot of weights, right? I'm like, yeah. He's like, okay, well, let's get the extra large. And at the time, I was like a medium. And I pretty much wore the XL sweater until I was like a freshman in college before I finally grew into it. So, I mean, like, I definitely was not all about taking those lessons because really, honestly, I did not want to live like my dad. And that's why I got our real estate all together. But eventually, I did become very frugal. I stand fairly frugal now, but I definitely had to experience life on my terms for a period of time before I started listening to what he was saying.
Yeah,
man. I bet you. I mean, I'm loving this. I could spend probably 2 hours hearing stories about your dad and frugality, and those are going to be the.
Oh, I got another story for you that you didn't find even funny. When I was like 16. This kid was telling me about like they were depressed and they got some medication for it. And my dad, I told my dad this, and he's like, "Oh, good. I'm glad to hear you say this." He goes into his office, he gives out me this list of chores, and he's like, "Here, do these chores, and you won't be depressed anymore because you'll be so busy you won't have time to be depressed." And he gives me these. And honestly, the funny thing about it is it actually worked. I was just so busy and so pissed off at him, I didn't have time think about my own depression. So
that's so funny.
There you go.
That's like, it's like, I mean, it's like the disappointed Asian parent memes. If you've ever seen those, or like Joe Coy, if you know that, he's a Filipino stand-up comedian. He talks about like with his Filipino mom. I know you guys aren't Filipino, but same sort of thing where he's like, it's like, oh, I say like, oh, my foot hurts or my stomach hurts. And she would always come in with like the icy hot, and she would be like, "Oh, it fixes everything." And she starts rubbing it on my face and rubbing it in my eyes. I'm like, "Oh, mom, it hurts." It's like, "Yeah, but your stomach doesn't hurt anymore."
There you go.
Funny. No, that is funny. I mean, there's kind of a life lesson there though too. Honestly, you can't be bored if you're too busy with something else to do. And I think that's something that gets a lot of entrepreneurs when they say that you're workaholics. It's like, it's not that we're necessarily workaholics and we don't know how to have any fun as entrepreneurs. It's just that, I mean, I don't know. We never like need to seak out other things. So
I too follow that mantra. I keep busy. I mean, I keep busy in my business all the time now, but I keep busy, and just in general. So
yeah, awesome. I love it. Cool. So let's dive into you a little bit and all the stuff that you're working on. So you did the full, got into the sales realm and a bunch of different things. Eventually came back around into real estate. I guess, what did that look like, and what exactly does your business look like now?
Yeah, so along the way, when I worked in commercial lending, one I worked in like health and fitness and personal training. Like, I kept getting exposed to people that were in real estate that were doing things like completely different. My dad, I'm like, wow, you actually like have a Corvette, you actually enjoy, you actually travel, you actually like do things that actually not what you're doing makes sense. And so early on, like, I knew that I needed to follow the frugal model, but more importantly, the second thing I knew is I wanted to basically put systems in place or to put myself in a position where I had a legitimate exit without just selling off. My dad's exit was essentially run these things super hardcore and then sell everything off, which to be honest, like we actually are kind of like on suicide watch when my dad retired, because we were kind of like, what is this dude going to do? He's going to go from like 60 hours a week, super busy, to like absolutely nothing. So that was kind of always in the back of my head. And so that's kind of how I do it now. Like, I don't have a massive staff. It's basically myself, my wife, which kind of worked her way out of the business. And then a VA, which we let go one about to rehire another one. And then I have a lot of vendors that work for me. But my life right now is very work-life balance, where I'm only typically doing like, 2 to 3 really large deals a year. And that's all I'm focusing on. I'm not trying to buy like, okay, 50 million deals. I've been in private equity. I've been in with actually 2 private equity groups where, they're doing over 100 million transactions a deal. And what I really came to the conclusion is that, I don't want to work for somebody else. I don't want to have 50 employees relying on me. I don't want that pressure. I want as little stress as possible in my life. So that's how I built out my business.
Nice. And so I guess, what does that acquisition process look like then for you? So are you like raising money, or do you have you accumulated enough cash over your years that you kind of just buy things yourself? How are you finding these deals?
So my portfolio is pretty diverse. I'm most known for self-storage, I think, because I have a blog for Inside Self-Storage, and I'm going to be speaking at the Worldwide Expo for them. And so they share a lot of my content specific to self-storage. And then, quite frankly, the last 3 years with our self-storage acquisitions and developments, they've exploded so much that it just, anytime, you kind of toss it like, oh, we had 137% return, something like that, people just kind of take notice. But in reality, my portfolio is, it's diverse, but because my self-storage assets have just exploded, it's starting to take over a greater portion. But I have I have a number of limited investment opportunities I've invested in as well, which I like the true investment, completely passive. Self-storage, industrial, triple net, brokerage, do consulting, mobile home park, assisted living. We're kind of all across the board, quite a few. I would say, though, that the majority of my time, though, right now is spent primarily in the 3 asset classes, which is assisted living facility, multifamily, and self-storage. And then I've been doing quite a bit of self-storage consulting, too, as well. So I just broke 100 hours of self-storage consulting not that long ago. That was kind of one of those things where it wasn't on my bucket list, but once I hit it, I was like, okay, well, I added it to the bucket list so I could check it off. So...
Yeah. Oh, that's cool.
Nice.
I'm curious because I've definitely heard about your self-storage stuff. I haven't ever heard about how you talk about your assisted living. What does that look like when you say assisted living? Are you talking like larger homes or smaller facilities and you own the actual company as well that runs the assisted living?
Go back a little. My first exposure to assisted living was I was a partner on a deal where I was supposed to be kind of like a limited investor, like silent JV partner. And the person did not operate it well. And then what happened was I ended up having to be more involved, and I absolutely hated it. I hated to hear about tenants dying. I just hated going to the assisted living facilities. I'm kind of a pansy like that. So I was like, I got out of it. But then I have a number of both clients and business partners that are very, very wealthy. And one of them is very, very successful in assisted living. And he came to me kind of with some issues that he was running to, where he wasn't sure whether he wanted to go to private equity or, raise funds. But then he also said, I have these deals that are kind of outgrown, and I have so much faith in you that I want you to be the broker for it. I'm like, well, I've never brokered a deal before. And he's like, yeah, but I know you'll figure it out because I've kind of done a number of things. And these clients that I service, I rarely take on new clients, but I pretty much do everything from them, from the bad guy who bakes bad news to employees or says no to investor pitches to, hey, I want to buy this property next door to another one. Okay, go skip trace it and talk with the owners and get a purchase agreement for you. So I kind of do all those things. And so as I started expanding those tasks on the assisted living system for this client, I kept just seeing the returns on this. And I was like, I want to get in on this, but I just want you to know that I don't want to know anything about the operations. I don't want you to tell me a single thing that goes on operations. All I want you to tell me is, am I getting paid based on what we discuss? And they actually were like, that's great, because that's exactly what we want. We don't want someone that doesn't know what they want talking about the operations. So how we're structuring those deals is the value and the tax benefits in assisted living, which are very good, are all on the real estate side, not on the business side. So I don't have any equity in the business, but essentially it's like a triple net commercial deal. I have a value in the land, and then the owners also have value in the land. So both business and land. So now our opportunities are aligned. And then we got this, 25-year lease locked in on this assisted living facility where the banks also like to lend on as well. So really, it's not even really necessarily investing in assisted living. It's more really investing in just a triple net healthcare opportunity, if anything.
That's interesting.
Gotcha.
So I guess the real estate asset on this, when you say it's an assisted living facility, is this like a medical facility, or is this like a big house, like a big single family home?
Yeah, so the assisted living can really mean a lot of things. You guys probably saw I recently started the assisted living tribe for it.
That was you.
Yeah, okay. And I could have named it 50 things, because there's senior living, there's adult foster care, there's assisted living, there's specialized nursing, there's home for the aged. I mean, there's so many different aspects of it. But primarily we are more focused on senior living, which is kind of 55 and up. Assisted living, which you can actually be 12, I got 12 years old, but you could be 25 years old, but recovering from a surgery and need to be placed in an assisted living home, which majority of the time people assume is 55 and up. It's not. And then there's also the next designation, which a lot of people go into, which would be kind of either specialized, which is a lot of logistics involved. It's a whole nother animal altogether. And then there's also home for the age, which home for the age is basically 55 and up retirement living, which is kind of what people normally think is actually assisted living. The main difference between the two is assisted living licenses are typically smaller, and there's a lot less restrictions on it. Like, I mean, you might not see your inspector at all over the course of a year, but your limitation is typically 20 beds, depending on what your state is. And so you might see an assisted living facility with 40 beds, and people are like, well, wait, how do they have assisted living license? It's because they have two 20-bed licenses. But once you get into 40, 160, 300, 400 beds, those are home for the aged. Those are much more scrutinized. So there's a lot more legwork that goes into meeting the requirements for a home for aged. Like, for example, if you don't have a lockable gate, that can be, that tenants can just walk out of. That significantly changes the type of resident that you can have, at your facility.
Interesting.
Gotcha.
Yeah.
Okay.
Man, I introduced you as a self-storage guy. I greatly discounted your knowledge. You're just like all over the place. I love it.
Yeah. A lot of deep.
You can tell I take after my dad. I'm deep in the weeds of everything. The biggest thing is I'm deep in the weeds, and then I teach somebody else how to do it once I figure out the best way to do it. So that's really kind of been the take from my guy and from my father.
Yeah. That's awesome though. Cause like, one of the big things you hear spouted so much by real estate people is like, pick a lane, become an expert in that, and then just like only do that. So you see so many people that like, they only do single family, they only do self-storage, they only do multifamily between 15 and 40 units, they only do 100 plus unit multifamily, whatever. But you have your hands in everything. So like, how did you like learn all of it? I guess, like, how do you feel confident going into all these different kinds of opportunities? Because I mean, like, even for us selfishly, like, we've been more on the residential side forever. We own tons of duplexes, and like the biggest unit we have is an 8 unit. But like going into like other assets just seems tricky, I guess, because we're not confident underwriting them. So how did you cross that barrier?
Yeah, so funny, I was just on the webinar, kind of explaining kind of how I value across the process, but you kind of asked two questions there. So the first, to kind of preface it, I wouldn't say that me investing in a lot of different asset classes is the best way to go. Because personally, for me, what motivates me now is I like challenges. I've never done this before. I've never built an eco-friendly apartment complex. So I'm going to figure out how to do it someday. At one point, I even wanted to own a movie theater, but based on how COVID has affected that, I don't think that will ever happen now. So that's part of it. But the one consistency, though, is that I do know West Michigan really, really well. So I'm leveraging my advantages in West Michigan there. And then also I'm leveraging operators that also know what they're doing. I mentioned I invest passively quite a bit too as well. How I diversify now in this, as far as investing passively, though, is that there are very, very strong markets that I want to be in that I just don't have where I don't know Phoenix or Raleigh, those markets very well. But I know very strong operators are investing in asset classes that I like, that I do. So that's where my passive money goes into. So that's where, like, if I make $1 million on a self-storage facility in Michigan, maybe I'll set aside 20 or 30% of that to invest in Raleigh or areas like that. Now, as far as evaluating all these deals, in almost all cases, it's the exact same steps. It starts with basically a feasibility, where we are determining how much value they had. So whether it's self-storage, whether it's an assisted living facility, whether it is a multifamily, I'm looking at what are the current rents or prices that we're charging now, and where is the market going to be at within a 4 to 20 mile radius, depending on what kind of asset class it is. And then we're building that out. That at this point is done all by a VA for me. If that meets kind of our baseline criteria, then my VA will normally present that to me with kind of 4 or 5 other deals. And normally what happens is when they present, because what happens, anytime I get a listing from a broker or something like that, or I see a deal, I'll send this to my VA and I'll be like, or my assistant, I'm like, hey, give me a phase 1 and then phase 2 if you like it. So then on a weekly meeting, they're coming back with, okay, these are the 5 deals you sent me this week. These are the feasibilities we've done at each of them. And then we're kind of putting them side by side. Like, well, hey, we have 2 that we like, but this one is so much better than the second one. Let's just focus on this first one for the next week. Have the second one to back up. These other 3 meet our criteria, but they're not even close to those, so let's just disqualify those or put them on the burner. And so then from there, then we are determining kind of the value add that we can force. And so generally, let's say that I have an apartment complex or I have a assisted living facility, and I can add $100 per unit per bed or whatever. And let's just say that it's times 10. Okay, so $10,000 of value add. Okay, and then let's say that I just say it's 100%, because like in assisted living, for example, if I go from 16 beds to 18 beds, my expense ratio actually in a lot of cases doesn't even increase, because my staffing for a 16 bed facility is the exact same as the 18 beds. So we're just kind of keep. I'll have a formula for how we assume how much expense ratio is going to go up, because to be honest, a facility that is 100% occupied has a much lower expense ratio than a facility that's 60% or whatever. So so you look at $120,000, and I'll just use a 10 cap, just make it even. So it's easy. So basically, just off of rent raises, which is the easiest, lowest hanging fruit, I can add $1.2 million of value just by doing that. So I have a metric that right off tells me, okay, so for me, that number to me, I'm going after is typically $1 million. And the reason why I'm going after $1 million is because if I'm using investor money or my money or whatever, let's say I'm only keeping 30%, then that number might be going down to $300,000. Because if I'm taking 30% equity, my limited investors, then they're getting $700,000. So typically it's $1 million, and to be honest, it's kind of pushing more. Obviously, if I'm doing the deal myself, then it could be probably closer to $600,000, because I'm using my own money. And you had asked this before, I do both. It just depends on what I feel like at the time. And so that's how I go. And then from there, then we are building out the first year and what that pro forma is going to like. That part is the hardest part to outsource to my VA, because we talked about niches. If I was doing Class A, 100 to 400 unit properties in Phoenix, all built in 2000 or newer, my VA could use a reasonable amount of rules of thumbs to put that pro forma to me. But we got self-storage, we got assisted living, we have multifamily, we have mobile home parks, and sometimes we're buying 30-year-old properties, sometimes we're buying 10-year-old properties, even though I do have a few rules I just don't break. But that part is very hard for me to outsource, because I can't teach a VA to do all those things. And honestly, if I teach a VA to do all those things and it's happened for it before, they are getting recruited and they're getting offered 6 figures, to go someplace else. It's such a valuable to have somebody who has that much underwriting experience in so many asset classes, because like sometimes I'll have a pro forma. Sometimes I have appraisal. Sometimes I have actuals. Sometimes I have a guy that just give me an offer based off of it, and we have to go off of that. And so because we have so many different ways, I can't have a VA go in and say, hey, use the standard operating procedures for a 30-year-old mobile home park that is needs like all these things, and the rents are significantly below market. And it's like, well, I haven't done that. I've done a mobile home park that's brand new. I've done one that is low income. I've done an assisted living facility for you. So I would say that's probably one of the most difficult aspects of my business that I can't remove myself from. But there's 3 ways we've done that. One, we've done it by going after super high quality assets in appreciated areas with strong economic indicators. So that eliminates almost all tertiary markets. And then 2, our deal size, we're going after 10 million plus. So once you get into 10 million plus, you're less likely to get into these like, hey, I barely have any docs for you to go after. Most of the time you're working off of an appraisal, actuals, or you're working with a pro forma that the broker's giving you, which is obviously the least desirable for us to work with for building out our own personal performance. Yeah.
Of course.
Yeah.
So you talked about brokers, and actually I do want to dive deep into this VA thing, but I actually have another question, and that is, how are you getting the opportunities to underwrite these deals? Like, are they just strictly coming from brokers? Do you do marketing or referrals? What's your main lead source?
There's a number of them. So at the beginning, what used to happen, and I think you guys can appreciate this, is that we found a formula, and I don't mind disclosing it because I'm not really going after it, but we were using national data. So like everybody goes after the absentee owner, the high equity list. We all know that, right, as well. Mm-hmm. Well, in my market, I essentially knew that expiring rental certs was public information, but only in my market. So if you didn't know my market, you didn't know that exists, you couldn't do that. So what we did was we took the normal indicators, but to make it even stronger, what we did is I found that if somebody had a 6-year rental certification expiring, if I could reach them roughly between 6 and 9 months, and they also hit the absentee owner, they also hit the high equity list, that criteria was almost a 100% chance that they would consider selling. Maybe not at a great price, but it was almost 100% of the time they would do that. And it was a list of only like 40 people I could do to hit those. And keep in mind that I was doing this while I was working a full-time job for a Fortune 500 company making 6 figures a year. So I was driving 60,000 miles a year, and I was banging out calls to these people while doing that too. But so that's why it's kind of like the Pursuit of Happiness, where Will Smith just skips to the top of the list and calls the most wealthy guy on the list instead of starting at the bottom. Yeah. I'm going to call these super 40 qualified people. And so that worked out really well. But then eventually what happened is I grew out of that. I'm like, you know what? I want to get into commercial. But then what happened was the clients were coming to me and saying, hey, if you ever have like a fourplex or duplex or something you want to get rid of that you don't like, go ahead and like sell it to me. I'm like, okay. And so at the beginning, we're like, oh yeah, I got this lead. Let's just make something off of it, and I'd sell it for $5,000. And so that grew our brokerage side. But then what happened then is that these guys that had fourplexes and eightplexes, a lot of times they also had a 40 unit or a 50 unit. But they're like, I'll sell you my 50 unit, but you got to buy my 4 unit as well. I'm like, perfect. This client of mine will buy your 4 unit. I'll buy your 50 unit. Then from there, we kept evolving. Like one of the things that, if you ask people about me, and I'm going to flat out be honest with this, most people have a very strong opinion. The people who know me really well normally say really good things about me. There are a lot of people that get pissed at me because they've also heard bad things about me. And I will say that a lot of times is because I'm the dirty work guy. Like, so some of my clients, if they want to say no to somebody, if they want to break bad news to somebody, if you have an idea to pitch for a new business that you want to start, and you go to one of my clients and say, hey, would you invest in this? Yeah, talk to Charles. Charles will tell you. I have to be the one that basically says no, and I basically have to be the one that be as candid as possible to say, like, this is not investable. We're not going to do this. I'm going to make a recommendation to my client that he not invest in this, or she not basically even consider this for these reasons. But what would happen, though, is that sometimes you would get opportunities. Like we had a deal where, it was 84,000 square feet of industrial, where the guy basically wanted to expand his footprint for a catering business by like 15 to like 20 or 25,000 square feet. I'm like, you're so ridiculously far below rent. Like, you can't leave, because if you go someplace else to get 5,000 square feet more, you're going to pay double your rent. Like, I don't know how we can help you. And then he's like, Well, that was the thing I was thinking. The owner came to me and he would sell it to me for at this price. And immediately he said, wait, what price? And the first thing that clicked in my head was that, okay, well, one, I need to talk to this owner. And two, I need to figure out how slow can I play this? Because I can't say yes so fast if this guy questions why he's selling to us at this price because it's such a good deal. But so things like that, opportunities like that. And then also it comes to like networking with others, doing brokerage listings with others, consulting on deals. For the longest time, I used to do a lot of prove-it deals for people, or like deals where like self-storage guy has a facility that I want to buy, and they would say like, I want to sell it in 4 or 5 years, but I got to figure out what I want to do with it right now. And then so we look at his pro forma, look and his P&L, like, hey, you got to raise your rents. Like, well, I don't want to do that. And then it's like, well, hey, let me do this. Let me manage this property for you. I'll do it for like $5,000 for 3 months, and I'm going to give it back to you worth $1 million more. But when I do that, my ask for you is that whenever you sell it, I'm the first person that gets to say yes or no. If I don't buy it because you want more money, that's fine. But then if you list it with me. So whatever way I can find value for other people, whether it's being a bad guy, doing the dirty work that nobody else wanted to do, being the 3-and-D guy that basically annoys the star basketball player on the other team, whatever it needed to be, I basically found a way to create value for others. And that's how I built my business.
That's crazy.
That's
cool.
I
need to go rewind that and just listen to all the things that you said in there, because there's so many good nuggets. I'm just sitting here thinking like, how on earth? Like it's just like a true entrepreneur. We don't have very many people that come on this show that are like true entrepreneurs, solving problems, like figuring out how to get stuff done. Like that's super impressive. I'd love to go back just really quick talking about your VA that you had before that you have doing underwriting for you, because that's highly fascinating, because we have a lot of virtual staff, from, people that are admins that are doing like number crunching work to like high skill VAs. But I have yet to hear of someone using a virtual to solely rely on for underwriting. Like, first off, what kind of VAs are these? Like, where do you find them? And like, how do you trust them with that? Super.
Yeah, I mean the underwriting aspect is pretty easy, because like I can show my VA how to like for example, like when my VA does that level 1 analysis, I can and let's say it's a high level apartment complex. Most of that information is coming from apartments.com or just through a Google search. So I can just show them, okay, I need you to use Google Data Scraper, which is a free thing, and then you got to basically do Google Data Scraper and pull out all apartment complexes within 15 miles. And then I need you to basically put on the sheet what the unit prices are, and also do they have any of them available too as well. Because that's another thing too on a lot of feasibilities we do, is that if I show there's 50 one-bedroom apartment complexes available, I don't really care then what they paid then, because that shows that there's a lot of inventory. But if I show that all of them are full, well, shoot, I might realize, you know what? I'm okay with taking a little bit of risk on this deal, because what my numbers tell me is that the demand is so high, nobody's found the pricing like ceiling on it. And then we've had success there too as well. But my secret sauce is simply, my daughter is basically my fact checker on these standard operating procedures. So my daughter's just turned 11. To be honest, she actually is getting to the point where her level of knowledge is probably like better than most adults now, that I don't know if I can use her anymore. Well, I basically try to get somebody that does not know anything about real estate, does not know anything, no preconceptions, no anything, and they will go through and they will foolproof our standard operating procedures. So they'll go through and be like, well, hey, what is the collecting key software? I'm like, oh, shoot, I got to explain what that is. Okay, cool. We have to put the link in the software for them to access it. And then, they'll be like, well, hey, what is PITI? I'm like, oh, crap. We can't use that abbreviation. We got to do that. And so essentially we're foolproofing it. So then when we get a VA is basically going through a process that multiple dummies essentially have gone through and basically figured out how to deal with these directions. Gotcha. So that's how we do, is we foolproof the process that a 10-year-old can do it, a VA should be able to do it. If a VA can't do it, then they can't do the job.
You're taking the old adage that like you need to have your processes so simplified that a child can understand it, and you're literally doing that.
You're literally
Like,
doing
literally
it. Yeah, I love that.
That's so crazy.
But I also love that your daughter's become such an expert. You might not be able to use her anymore.
Yeah, it's getting kind of rough too. I mean, and now too, sometimes she's getting at the point where she's almost a teenager, so she's giving me like just the crap that she basically
Dad.
like says to me. Like I'm like, dang it, she just talked back to me, but it was like 100% on point with what she just said. So,
Oh, nice.
Yeah. Man, that's crazy. Like you've just dropped some really awesome knowledge. And like I said, I am so just blown away by your entrepreneurial nature. Because like I said, we don't encounter people like that super often, but you've pieced together some really, really cool stuff. And especially like utilizing the VAs and going that sort of way. I think, anyone's listening to this that's thought about virtual assistants. One of the biggest questions people always ask us, they're like, it's around trust. And it's always like, they ask us how, like how they can actually find the tasks that they're able to do. Cause everyone's always thinking that it needs to be like number crunching or something super basic, but you're showing that it is only limited by how good you can make your processes that you give them.
yeah, or even like another way that you could do it that we've done too as well is that like we have a task that we give for homework, and like it'll be a task that like, hey, we know they have to do it. And when we interview the VAs, we basically will say, okay, this is the template of what this is the finished product. This is the standard operating procedures. You have 2 hours on this day and time. We're all going to give you 2 hours to do this task, and you got to return it back to us. And if we find that only one VA is able to complete it correctly, then for me, some people would say, oh, great, we got to hire that VA. For me, that also tells me that, listen, if only 1 out of 3 VAs are allowed to do this, then our standard operating procedure isn't good enough. And so that's free right there. We just use our interview process to improve our standard operating procedures there too as well. So that's kind of on the flip side of thing too as well, is that ideally we're giving them tasks that all the VAs or majority of them can do, not just 1 or 2 of them, because people say I want to hire a rockstar VA. On the flip side of that, I want to have rockstar standard operating procedure, so then that way any VA can do it. So that's another way to look at it as well.
Yeah. Yep. That's awesome. And where do you find your VAs normally?
I've used a number of things. I've used I think onlinejobs.ph. That actually would be a question for my VA, for my assistant. to be honest, that we've also used staffing companies too as well. So
yeah,
awesome. Yeah. So do you use a virtual for your assistant, like a normal VA?
My executive assistant is I really have like 3 VAs. My executive assistant is local, but he works remotely and operates like it. He gets paid very well. I have another VA that I pay I think 40 or 45 an hour. And but because her understanding of bookkeeping and tax benefits to me is so on point that my CPA will not call me. They will call my bookkeeper or my VA bookkeeper and say, hey, we need you to slide this $300,000 line item over to CapEx because he's going to get better tax treatment if he does it this year. Or basically moving stuff around. And so she understands that. And so from that standpoint, $40, $45 is expensive, but if she does it in 5 minutes versus 5 hours, it is better. Yeah.
That's cheap.
So, and then I have a VA that's super, super simple that kind of is more of an assistant to my assistant. Because I really don't want to have 5 people coming to me. So really it's more my executive assistant. This is stuff you delegate to what you need to get done, but also realize that you also take accountability for the VA because honestly, that's probably one of the biggest struggles is that when you have a staff member that is overseeing the other staff member, sometimes they kind of become like the mother goose when you say you can't act as if they're your child. You have to act as if this is your company and what you would do there. And obviously I've run into problems with that there too as well.
Yeah. Yep. That's interesting stuff. Yeah, Dan might need that bookkeeping connection. he's navigating ours right now, and it's a freaking disaster. And even literally right before this show, I was looking through our taxes, and I was like, Dan, how come your primary house is listed as a rental property? And he's like, I have no idea.
You just gotta make those.
We might need to
cover your butt calls. So yeah, I mean, we could go there too if you want. So
no, that's good stuff, man. We've gone all over the ship. I love it, man. You're doing some really cool stuff. We gotta start winding down here though. So you have any questions on that last bit there, Dan? I know that the VA and that sort of whole thing is high interest to you.
Absolutely, but we could take that off air so that we don't bore our listeners
right.
with my super in the weeds questions about some of this stuff.
Okay, perfect. Awesome. Yeah, maybe we might have to have it back for round 2 at some point, Charlie.
I
I think
so.
you got. I just imagine you have so much other great things you can talk about.
Yeah.
Awesome. So going into the end of the show here, we have the same 3 questions that we ask every guest that comes on the show. So the first question, which is always the group favorite, is what is your craziest real estate investing story? And this can be a big win, a big loss, a crazy tenant, crazy transaction. The only rule is you're not allowed to talk about finding dead people in a property, because we had that question too many times, that answer too many times, and it's never entertaining. It's mostly
well, I didn't find a dead person, but we did find a local politician with a prostitute, and so that enabled me to get a better deal on the property for sure, because it was just such a nightmare headache. So
Oh my
I would say that would be the nightmare. The only other nightmare I would say is that, early on in my process, we bought a property that we're flipping in a new market, and just everything went wrong because we couldn't make any assumptions. We didn't have a lot of trust. But the biggest thing that came as a result of it was that I realized I needed to start networking, because I got away from networking for a bit because of I had a couple guys that essentially tried to take advantage of me. But I got in a really bad bind. I lost money, but then there's some people that just really came out and stepped up and helped us, that even though we lost money, the relationships and what we learned out of it kind of panned in. So it just made it that much better. So
yeah, that's super valuable. That's a win from a loss.
Yep.
How about that?
Yeah, absolutely. Cool. All right. So second question, what is the number one piece of advice you would give to either a new investor looking to get started or to a small-time investor looking to take their business to the next level?
So I got so notorious for giving this answer the same way that I actually had people reaching out to me that were listening to that. And so the advice I was giving was value somebody else's time at what it's worth. Early on, I had a mentor that essentially he stopped responding back to my text messages, because I was sending him like questions he could answer in 5 seconds, but I probably could have found online like in an hour and a half or 2 hours. And he simply said to me, like, after I kind of confronted him, is that, Charles, like, you're acting like I'm here basically to answer your questions. It's like, yes, I'm answering your questions over 2 or 3 minutes, but if my time is worth $10,000 an hour, you just costing me like $300 by asking me that question. So you need to value my time at what it's worth, not what your $40 an hour time is worth. So if it takes you 6 hours to find the answer to the question, great. Spend that 6 hours to find the answer to the question versus spending $1,000 of my time for me to answer the question. And so now on the flip side of that, now I have people asking me that, okay, hey, I want to pay you for time. I'm like, okay, no offense, but I do not want to charge you $1,800 an hour or whatever, because that's my consulting fee. I just know you're not going to benefit from it. So now I'm going to pivot that advice now, and I'm going to tell people that if you're listening and you hear this advice now, value the person at that time, but also understand when to utilize that. You don't want to throw $3,000 out of advice on advice that I'm going to give you that I've given 50 or 100 people I've done on a ton of other podcasts. Listen to podcasts like these.
Sure.
Get as much advice as you get, and once you absorb all the free stuff that you can get, then move over to that. Unless your time is worth $10,000 an hour, then yes, call me then, because at that point, then $1,800 an hour is nothing to you. But if your time is worth under $100 an hour, you have to put the time in. You need time, you need knowledge, you have capital. If you don't have the other two, then you have to leverage your time. So that's simply how I leave it that way.
I think that's super good advice. And I guess for context for people, so you said your consulting time is $1,800 an hour. This show's going to be just under an hour. So there's a lot of great information people can get for significantly less than that.
So,
exactly.
So that's cool. I mean, I think that's super valuable, and it is, especially for newer people. I mean, it's hard for them to understand that and have context. And also too, I guess in their defense, there's a lot of people out there that are full of shit that'll charge tons of money for time that is not actually.
Yeah, I mean, my consulting fee is not what I think will get clients. It's more of the what can I do to shock people so much that it scares them away. Because the majority of my time consulting or in the consulting business is people ask me tons of questions about whether they want to do it. So it's easier to just start with this high number, and then now I whittle it down, and so now I'm not spending so much time. Because when I was charging $600 an hour, I was spending 10 hours to build 1 hour, then it was just a complete waste of my time. So
Yeah.
Yeah.
Totally.
Yeah. Makes sense. Good stuff. All right. Last question. Where can people find you, follow you, and reach out to you if you'd like them to do so?
The most useful thing for any of your listeners would be my YouTube channel, especially if you're looking at self-storage or private lending. I have a couple different playlists for a couple different categories, but that's just YouTube at Twin Oaks Capital. That would be the most important, because almost any time somebody asks me a question consistently that, this is a good question, I normally make it into a video. So if you're asking a question that and you're newer, and especially if it's about self-storage, I probably have answered it in some format, or it's something that I charge good money to do that, or just ask the question in the comments. And if I get that question a ton, then normally it becomes a video in our next one. So I would say the best thing is there. Otherwise, if you want to just kind of follow what I'm doing, you can follow my Instagram. I do talk about investing and things like that, but I'm not a big social media guy. If anything, you're going to see all the food I'm eating and what I'm doing with my kids. But that's a good start, though. But I do drop a good amount of knowledge there on real estate, too, as well. And that's Charles C. Kao at Instagram.
Perfect. Awesome. Yeah, it's fine. I'm not usually a big YouTube guy, but I'm going to definitely need to go check out your YouTube channel.
Absolutely.
You're doing some good educational stuff on there, because, I know that you're actually legit and you're not a YouTuber that's making, $1 million a year off your YouTube channel talking BS with nothing.
Talking about the no money you make in real estate.
Yeah, right. So awesome. Yeah. Well, thanks, Charlie, man. I really appreciate you coming on the show. This was a super awesome episode. And don't worry, I'll rehash in our introduction that we're going to record now that you're not just a self-storage guy, and you are a true entrepreneur of all trades.
You're an well-rounded entrepreneur.
Right. Yeah. So awesome.
Yeah.
Well, thanks so much for coming on the show. We really, really appreciate it. And guys, if you enjoyed this show, please go and share it with anyone else who might enjoy it. It's the easiest way for us to grow this podcast is for you to go and share it with everyone you know. And honestly, if you didn't enjoy this and you do not appreciate everything that Charlie's doing, I don't know what to tell you, because this guy is pretty much about as real as it gets when it comes to being a true entrepreneur in the business, the real estate, the investing space. So anyways, guys, Agreed. Go ahead and share it with everybody. Aside from that, if you go to collectingkeyspodcast.com/free, you can get Dan and I's free 5-step guide to start generating off-market leads. And then you can start, maybe having opportunities that you need to reach out to Charlie and pay him $1,800 an hour to help you analyze.
$1,800. So.
$1,800. Okay. Yes. Yeah. $1,800 an hour for analyzing. So anyways, guys, go ahead and get that free guide at collectingkeyspodcast.com/free. And aside from that, thanks so much for listening, and we'll talk to y'all next week.